Morning, Steve Freed in Chicago with the morning grain comment. Well, overnight we saw prices somewhat mixed, beans lower, meal lower, nearby corn a little bit higher, and wheat lower. And so I think the market is trying to settle into some kind of trading range prior to the USDA's March 31 report. Overhead resistance is linked in part to the fact that some of our export demand, especially beans and wheat, has slowed down. And we also note that above the market, what if we have good crops next year globally and here in the United States? That limits the upside in prices. Conversely, what if we don't get all the acres planted here in the U.S., or what is there less than normal weather in the northern hemisphere this year? And then that means that offers good support. Nearby corn is supported by strong basis levels and a better than expected weekly export inspections number on Monday. And also China came in and bought U.S. corn. People are wondering, do they need the corn? That puts them at 20 million tons of U.S. commitment, with a little over 5 million tons in the unknown. There will be somewhere between 5 and 7 million tons shipped to China from either Brazil or Ukraine. And so the U.S. numbers probably suggest that the USDA is too low in their estimate of total China imports at 24 million metric tons. Tomorrow we also have a meeting in Alaska between U.S. and China. It's supposed to be about clean air environment, but the Chinese could ask for a drop in the tariffs of their imported goods versus agreeing to buy the phase 2 goods from the United States. We have the vaccine and the economy versus higher debt, higher taxes, and maybe higher interest rates. And all these market factors should keep trade volatile. March 31 report is going to be critical. USDA is going to give us an idea of acres, and also March 1 stocks. A lot of focus on the corn and the bean stocks, and whether or not they're enough to get us through the rest of this marketing year. And where's the ownership? Is it on farm or is it off farm? Weather-wise, we're looking at rains in Argentina, a little bit drier pattern in Brazil. That should be good for crops. The question mark is that if this drier pattern in Brazil persists, will that hurt the final corn crop and production numbers? They have about 16 million tons of vessels to load of beans at the ports, and they loaded a little over 6 million tons so far, and they probably will load somewhere between 11 and 13 million tons this year. Meal market and bean markets finding also some resistance on concern about lower crush margins, lower crush rates in China due to the African swine fever, and whether or not that's going to impact their import numbers. So again, trading range, it's hard to rally if we have good crops in 2021. It's hard to break if we don't. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.